Good morning, everyone. This is Rick Baker. I'm in the Frisco, Texas office of Coldwell Banker. That's about 20 minutes north of Dallas. Here's the outlook about the DFW market and real estate in general. What most people fail to realize is the long term trends. And the long term trends are what really drive the market. What's happened is because of the craziness of the last 4 years where we had ultra high inflation and ultra high interest rates, people stopped buying homes. So you have 4 years of pent up demand. Let me show you a little stat. That is the actual number of closed sales. If you look there, we're averaging for years and years and years. Now, COVID was a blip. That's an abnormality. Ignore that. Look at the rest. We're averaging about 5.5. The low was 5 million. We've been losing, on average, 1 million home sales per year over the last 4 years. In addition, because of the insanity of the 2008 real estate collapse that was caused by a certain political party that starts with the letter D, where they're out buying votes and they created Mickey Mouse mortgages for people that weren't qualified to buy, and they wiped out a few trillions in debt, America stopped building homes. If you Google this, there's between 4, 5, or 6 million homes that were not built that should have accommodated population growth. Right now, there's about 18 million more people in America than there were 10 years ago. Now, I know Trump is deporting a few million people a year, but somehow outside of immigration, legal and otherwise, America continues to grow in population. But the bottom line is if you've had the last 4 years where you're losing 1 million sales per year, you have huge pent up demand. Everyone's waiting for the interest rates. Interest rates affect pricing. COVID proved that to anybody that doubts that statement. Interest rates went to 2.5. Houses started selling for 150,000 more. That is coming now. Today, mortgage rates are 6.25. Everybody predicts that at the end of this month, the Fed's meeting again, they're going to drop the rate again. Now, again, the Fed doesn't directly correlate to mortgages, but they move in tandem steps. Everyone says by next year, we're going to be in the high 5% range. If you want to argue specifics, 5.75, it really doesn't matter. Once we get to 5.99, all the buyers are going to wake up and they're going to run out and get pre-approved. We have a lot of inventory now, which means you're able to go out and negotiate amazing deals. I closed a home in Heath, 516 Heath Ridge Landing. Appraisal was 1.33. My client bought it for 1.22. Beautiful home, stunning renovation. But my home, I was at an inspection yesterday. The inspection was for a home. It originally came out at $1,089,000. My client's under contract for $225,000 less than that. Stunning custom home, 3,700 square feet, down in Preston Woods, which is an amazing neighborhood. Brand new 1-year roof, 3 brand new ACs, a $75,000 to $100,000 kitchen, all Miele appliances, Miele cooktop, Miele commercial cook hood, double Miele convection ovens. They even had a built-in Miele espresso maker into their kitchen. We're talking people that loved the art of cooking. And kitchens and baths sell homes. The entire home had brand new wood floors, high-end quality floors. My client's getting that for the mid eights, high to mid eights, $220 some thousand below original ask. Right now, there's a unique opportunity for the next 3 to 4 months where you have, again, the traditional downturn in the number of sales, the traditional downturn in the number of buyers. If you go out now, look for an amazing deal, you can write truly, deeply insulting offers. The guy that closed for $1,202,000 2 weeks ago, 516 Heath Ridge Crossing in Heath, my first offer was $900,000. You got to play the game. um, the offer we wrote on for the one that my client's buying now, he's I'll post the address. It's Harvest Grove in Prestonwood. The number, I think it's 6516. Look that one up. Stunning home. You know, the first offer we made was about 150,000 less than we're under contract. Just to see what the seller will do. I believe in aggressive offers when there's a high supply. And we spent over 6 weeks negotiating that. And you know what? That's what's possible when you have a lot of inventory. And the house that we were at the inspection on yesterday, the house is vacant. That seller was bleeding probably $6,000 a month. So we got a home run deal. That's what's possible now. If you go out, look at what's out there, spend a lot of time to get educated, start writing aggressive offers, they're going to counter you. So that's what's the unique opportunity, because when the interest rates drop, you have that huge wave of pent up demand. That's what's going to happen in 2026. So give me a call again. It's Rick Baker with Coldwell Banker, 972-836-8880. Now, this is just about the Dallas real estate market, DFW. Sorry for the people on the Fort Worth side. Don't want to insult anyone. But if you look at what's out there, every real estate market is different. Dallas is an economic miracle. We have countless number of millions of people that are moving here, and the best thing you can do is go buy another home before the prices run up. And if you're thinking of selling, don't. Give me a call. I'll talk you out of it. I routinely talk millions of people, millions of dollars every year out of selling their home. Go to my website, neversellyourhome.com. I was an investor before I was a realtor. At my peak, my wife and I, we owned 52 rentals at the home at the same time. I self-managed them. I teach people how to go from renting to owning to landlord. And it's the best thing you can do, because there's no doubt that Dallas is going to continue to explode with growth as more and more people come here. So give me a call again. It's Rick Baker with Coldwell Banker, 972-836-8880. Appreciate your time.